The Dow closed higher for the fourth consecutive day, its longest winning streak in almost a month, and the S&P tech sector is now closing at a record today. Tom Lee, head of research at Fundstrat Global Advisors, is now joining us. He contributes to CNBC as well. Well, Tom, happy holidays to you. I appreciate you being here. I noticed in the producer's comments that you think the animal spirits will return next year, so I would like to ask you a question about that. Which animal species return, and did they hibernate this year? I'm interested to know which species you believe will be in full force in 2025, as we've seen several species out in full force in 2024. The reason I'm thinking of animal spirits, and this is a reference to Milton Friedman, is that the ISM has been below 50 for about 3 years, which means businesses have been cautious and haven't been very visible. Finally, though, the Fed is making cuts, and the new administration is thought to be very business-friendly. Therefore, I believe that businesses will be expanding and feel comfortable completing mergers for the first time in a long time. This, in my opinion, is a very favorable environment for financials, small and mid-cap stocks, and cyclicals in general, such as industrials. Therefore, even though technology is keeping up with the business, I believe that in 2025 the market will feel like it is expanding. Although I am aware that you are a classic optimist, Tom, I would like to hear where you believe the greatest threats to that prediction for the upcoming year lie. Whether or not there is a policy error will be the major obstacle in 2025. Two sources are possible. One would be the implementation of economic damaging tariffs by the incoming administration, which we know would have immediate repercussions, or mass deportations that have an unidentified effect on labor markets. The Fed may shift from attempting to maintain the economy to attempting to salvage it if it gets overly focused on inflation and permits the labor market to deteriorate. That, in my opinion, would be a really negative development. Tom, considering the focus from the incoming Trump administration, one of the major themes we just wanted to highlight for viewers and listeners is the notion that cryptocurrencies will continue to be a topic of discussion. We know you're optimistic about a lot of things related to cryptocurrency, but I was wondering if you could tell us which areas of the market you think would experience the best relative performance in 2025. For the past 8.5 years, our firm's investors have suggested allocating funds to cryptocurrency, such as Bitcoin and Ethereum. Given that the regulatory environment is actually getting more benevolent, that allocation should likely be far higher in 2025. Therefore, I believe that Bitcoin still has to be a major component of someone's portfolio, and I predict that it will reach about $250,000. Ethereum, which is currently trading at about $3,500, would likely perform much better as a result. Next year, Ethereum might reach $5,000 or $6,000. This year, in my opinion, is also likely to be known as alt season, during which altcoins like Solana perform remarkably well. Tom, similar to gold and gold miners, some of the businesses that use those commodities may also be involved if you believe that Bitcoin is a commodity in a relative sense. If such cryptocurrency expansion were to occur, which kinds of businesses would stand to gain the most? 2024 has taught us things. The best performing Bitcoin-related stocks, or what we would refer to as leverage stories to Bitcoin, have performed exceptionally well if we consider that they are either buying Bitcoin as a treasury asset or are leveraged to the price. These include Coinbase, Cipher Mining, and MicroStrategy. Other businesses, like as MEA, are following what Michael Saylor would refer to as the Bitcoin standard. However, I believe that a business like MicroStrategy provides excellent exposure to Bitcoin in an investor's portfolio, particularly for large-cap emphasis. What is the outlook for these stocks in 2025? Asked Doug Clinton of Deepwater Asset Management and Intelligent Alpha. Doug, welcome back. Seeing you is pleasant. Scott, you too. Happy Christmas. And Merry Christmas to you. Thank you. We hinted that Nvidia might not be at the top of the list next year. It's not that you dislike it, but you just believe that others might have a chance. Yes, I do. In my opinion, Scott, the hyperscalers' billion-dollar capital expenditures to develop truly general-purpose AI computing were the main focus of the last 2 years' AI trade. In order to train the AI models they are developing, they invested in Nvidia's top-tier CPUs. That motive, in my opinion, changes to bespoke silicon as 2025 approaches. This is because, now that their general-purpose infrastructure is complete, all of these companies, Amazon with Trainium, Microsoft with Meta, and Google with TPUs, will begin to use the bespoke chips they have been creating. They've all been working on producing custom silicon, and I believe they'll use it more aggressively in the upcoming year. What would happen if Nvidia didn't meet those high standards? People frequently draw comparisons between the AI and .com industries. They can be helpful at times. In this instance, Cisco was the poster child for the .com era, much like Nvidia is now. It acts as a gauge of public opinion toward the trade. Nvidia may stumble at some point next year, and other names, like as Marvell or Broadcom, may gain traction. However, I don't think it's accurate to say that the AI trade is done. Numerous other businesses are involved. It's not just about Nvidia. Others will fare similarly to Nvidia over the next 2 years as the trade develops. Do higher rates encourage consumers to return to the market's largest equities, or do they hinder the growth trade? In addition to select AI companies with substantial growth potential, I believe it might encourage investors to return to the largest stocks. If you go back to the .com period, interest rates were between 5% and 7% for the majority of the 1990s, which is well within the range of today. Low loan rates are not a prerequisite for technological progress. Although the mega caps have demonstrated their ability to command greater prices, AI-related software names like Snowflake might also attract interest. Outside of technology, what do you enjoy most? We at Intelligent Alpha employ AI to see beyond technology. The energy trade is one unconventional concept that our eye has been highlighting for a number of months. Although it hasn't been confirmed yet, AI projects that oil prices could reach $100 per barrel by 2025. The energy trade might become quite attractive as a result. Our current larger holdings include stocks that focus on renewable energy and infrastructure build-out, such as GE, ROV, and Schlumberger. Please let me know if you require any other changes. 150 year-end? In other words, Joseph, if we celebrate the holidays together one more, we will be 150. Or 156 months away. Sorry, but I'm out for 12 months. Yes, we anticipate, I believe, that our price goals will be in the high 150s in a year. What sort of multiple are you placing on that 12-month out at 150? Comparatively speaking, how would you evaluate that against whatever you believe to be the top comps right now? In 2025, I believe we will have a mid-$4 figure. In 2026, we anticipate more than $5. Those figures seem extremely modest to me. When there are times of significant growth ahead of us, we've seen the stock in the low 30s kind of level, and I believe we have that. Looking at where the Marvells and Broadcoms are trading based on our estimates, the peers are now trading more like the high 30s. That seems like a very realistic multiple to me. They have large margins, and you're dealing with these transitional problems once more. The stock may still be impacted by all of that. Although there are still some indications that the production of older products is beginning to slow down, Blackwell is incredibly resilient and their demand is extremely high. Tell me your calculations regarding the China aspect of this, since I believe that the tariff story and whether it will have any effect on this firm are among the major questions. Yeah, unfortunately, their options in China are already rather restricted. One of their products, H20, satisfies U.S. export control requirements. They produced a fairly respectable amount of that product, but I believe that we're going to see a slowdown nonetheless because those export control limits are so far below the state of the art in terms of what Blackwell can accomplish. In my opinion, you are therefore protected from the Chinese market. There aren't many expectations there in my opinion. The majority of AI gear, in my opinion, will simply be installed outside of China. And to the extent that Chinese businesses are using AI, they will most likely do it in places outside of China. Therefore, I don't believe that the tariffs will have a significant direct effect. Nvidia, in my opinion, wants to cater to those markets and prevent internal or Chinese incumbent solutions from ENA.